Welcome back, everyone. Sean Stevens here again with Broker to Banker Consulting, where our goal is to assist you with climbing the mortgage banking ladder. Are mortgage bankers required to have a cyber insurance policy? Last week, we discussed the importance of understanding what coverages your E&O policy actually extends to. This week, I would like to dive deeper into the protections provided under a cyber insurance policy and how it can be utilized as a risk mitigation tool for your mortgage banking business. Now, if you've not yet done so, remember to take advantage of our complimentary 30-minute initial strategy call, where we analyze your situation and discuss whether a banker transition process is right for you. During this call, we will provide practical expertise and understanding of the process from mortgage licensing, investor approval and relations, warehouse bank selection, third-party fulfillment providers, E&O and surety bond companies, origination strategies, coaching, consulting, and more. A cyber insurance policy covers expenses and liability resulting from the release of consumer or employee personally identifiable information, also referred to as PII. These can include, but are not limited to, the following cost: forensic and legal expense, crisis management cost, public relations expense, extortion cost, fraud response expense, business interruption, data asset restoration, third-party liability, notification cost, and social engineering. Now, to help put this risk in perspective, IBM's 2020 Cost of a Data Breach report documented the average cost per record for data compromised that contained customer personally identifiable information was at $175 per record. As such, it is important to understand what your organization's potential data breach exposure is. If you take the $175 cost per record from the IBM report and multiply it by your organization's total records, this will help you quantify your potential exposure. When determining potential exposure, remember that this not only includes closed loans at risk, but also anyone who has submitted their personal information, such as for pre-qualifications, pre-approvals, loans in progress, denied, and withdrawn files. Needless to say, the potential risk and cost exposure can be extremely high and very scary. As a result, it is extremely important to review your policy, understand the declarations page, and the definitions included within. For illustration purposes, I provide a cyber insurance policy declarations page, which shows a total policy limit of $1 million. Below that, it shows a sublimit of the policy, which provides $100,000 for social engineering. A sublimit is a limitation in an insurance policy on the amount of coverage available for a specific type of loss. This will be part of your coverage limits and not in addition to them. For example, even though the total policy limit was for $1 million, because it has a sublimit for social engineering fraud, this limits that loss up to only $100,000 of that limit, not in addition to. Once again, I can't emphasize how important it is to understand your cyber policy, declarations page, and applicable definitions. Remember to ask questions during your cyber insurance application stage and any subsequent renewals. Although cyber insurance is not usually a required coverage, it is highly recommended for mortgage bankers due to the current threat landscape. Now, wouldn't it be nice if there was a blueprint available that would walk you through the steps on how to climb the mortgage banker ladder? Well, that is where we step in to help with our practical expertise and understanding of the process, from mortgage licensing, investor approval, warehouse bank selection, third-party fulfillment providers, E&O and surety bond companies, origination strategies, coaching, consulting, and more. You can simply use our online scheduler to select a convenient consultation time and let us show you the path to prosperity.